Welcome. This presentation will introduce key concepts regarding revenue and expenditure forecasting, an important part of the budget development process. A more in-depth look at this topic is also available on the Division of Local Services website. Developing a budget requires a data-driven financial forecast to assess the current and future state of a community's finances and to provide context for funding decisions. This is an essential planning and policy-making tool that projects revenues and expenditures over a multi-year period. This helps local officials understand the long-term implications of pending near-term decisions. When building a forecast, local officials should observe trends in revenues and expenditures to capture annual data-driven snapshots of the town's financial condition. This practice should be integrated with the municipality's annual budget process and updated for each budget cycle. Forecasting promotes forward-looking budget processes that help communities avert potential deficits, achieve long-term fiscal health, and strategize on capital investment and community development. Presenting various budget scenarios based on different assumptions allows local officials to evaluate the impact of budget choices. This exercise provides a framework to be strategic about funding program expansions and to gain a better understanding of what funds are available for personnel costs, including collective bargaining agreements. A well-designed forecast allows a municipality to evaluate the impact of various decisions and policy choices over time. The forecast provides analysis in the form of a tool that projects the fiscal impact of adopted policies, program costs, and capital needs, setting the stage for future budget planning. In addition, a forecast policy should establish the practice as an essential part of the budget process and assign responsibility for its development and delivery. The policy should apply to the Select Board, Town Administrator, Finance Committee, and financial team in their budget analysis and decision-making responsibilities. Revenue guidelines should also be set by the policy. Municipalities should take a data-driven approach to projections, analyze past trends, and make realistic assumptions. As with revenue guidelines, expenditure guidelines should also be included in the policy. As part of this process, local officials should determine their approach to the budget, which means deciding whether it will be a level-funded budget, a maintenance or level service budget, or if it will include a certain percentage increase or decrease across the board or at the department level. While doing so, officials should identify any community-driven expense priorities, such as sidewalk and street maintenance in a busy downtown area. Personal services increase part of compensation plans or ratified collective bargaining agreements should also be included. In addition, an independently calculated cost of living increase should be factored in. To build a forecast, local officials should start by identifying the community's main sources of revenue. When analyzing revenue trends, budget staff should keep several best practices in mind. First, property tax levy projections should be confined to the limits of Proposition 2.5. The levy limit's relationship to the levy ceiling should also be reviewed to identify potential override capacity and to guard against hitting the levy ceiling, which would impact future levy growth. Second, budget staff should review 3, 5, and 20-year new growth averages when observing revenue trends. Third, while state aid totals are significant, it is important to remember that these amounts are subject to the state budget process. Fourth, conservative estimates on future local receipts should be used. The Technical Assistance Bureau recommends a limit of 90% of the prior year's actual collections. In addition, if applicable, the general fund should be reimbursed for enterprise fund indirect costs. Finally, it is important to not project one-time revenues in order to cover ongoing expenses. Local officials can use the Municipal Data Bank, available on DLS's website, to see their city or town's prior year's revenues broken down by source. The next step in developing a forecast is to identify primary expenditures and the continuing costs of operating at a base level of service. These costs are likely to be employee benefit and health insurance increases, pension assessments, debt service payments and other capital plan costs, state assessments, and continuing costs of departmental budgets. Finally, the forecast must quantify the impact of financial policies, including community spending priorities, capital spending levels, maintaining a certain level of debt service, the budgetary effects of maintaining stabilization funds and free cash levels, and the impact of funding collective bargaining agreements. For more information on this or other best practices, please visit mass.gov/DLS or contact the Technical Assistance Bureau at tacontact@dor.state.ma.us or at 617-626-2358.